But let's get into a discussion on the consumption trends. Is it the case that rural continues to outpace urban? Are discretionary spends continuing to see a comeback? Well, joining in is Arvind Singhal, Chairman, Managing Director, Technopak Advisors, and in just a short while, Milind Sarwate of Increate Value Advisors as well will be joining in. Good to have you on board. To begin with, Mr. Singhal, during the lockdown period, there was definitely a change in the consumer behavior when it came to buying a lot of products in bulk. Has this continued even after we've seen things ease out quite considerably? And walk us through some of the trends that you've observed from consumers in the last few months.
In terms of what trends have continued post the near opening of lockdown now, online shopping, I think, is going to be there to stay. I think the boost which online shopping, especially groceries, have got. Other categories anyway were seeing a good growth in terms of fashion, lifestyle, consumer electronics, mobiles. But grocery shopping is certainly going to stay. Ordering food, again, the trend is continuing as far as post-COVID is concerned. So there is not much of a difference there. Having said so, I think whatever we have spoken to some of our clients, and what we see on the ground, I think finally in the absence of any real stimulus in the hands of consumers, the consumer spending is beginning to show signs of stress across board. The December numbers don't seem to be very good for retailers by and large. There would be some exceptions. Category after category, especially when you look into clothing, footwear, look into even automobiles, consumer electronics and durables, the next quarter, January to March 2021, is very, very crucial to see whether the recovery is sustained or whether it was just a blip, for festival and the recovery is not really there.
Milind, good morning. What a year 2020 has been. Massive disruption is what we've seen. Walk us through how you've seen, an absolute shift in the consumer behavior. We just heard out as well, Mr. Singhal talk about how online has taken precedence. Do you think that some of these shifts that we've seen are likely to be tectonic in nature or very short-lived, and that within no time things will go back to normal?
Good morning, and thanks for having me on this show. I feel the shifts will neither be tectonic nor will they be short-lived, because I feel that what we call as a cliche, the new normal is always going to be different from what it was before. I feel that COVID times brought us three big effects. One of them was immediately psychological, the fear set in. But there was also a huge technology effect, and a lot of things moved online. In the normal course of time, they would have taken years to shift, but we were forced to shift very quickly. And the third part, which is actually the very relevant one and which Arvind also mentioned, is the income effect. Not only was there a drop in income or a cessation of income for many people, there is also a huge feeling of uncertainty about future income. And to my mind, while the first two changes did cause and create new markets or will continue to create new markets, the third one, which is the income one, is the real imponderable one. How do we really increase disposable surplus in the hands of consumers? And from that, how will demand come up? Meanwhile, there was a huge surge in products based on three attributes: safety, hygiene, and health. And you are already seeing signs of the surge in the sales of products based on these three coming down. Hygiene products have tapered off because we don't wash hands so often as before. Health products, while they will continue for a while, I think it is human nature not necessarily to chase health all the time. And I think that discipline or that fear-based discipline will come down over time. So I think there will be shifts. They may not be tectonic. There will be category shifts. But I feel that the big one which the FMCG sector needs to look at is the technology one, which is the online one. And online is all pervasive. And by calling it online, I feel we have been a little unfair to the technology part. It is actually more digital. And everybody is going online and digital. It's not only just e-commerce, but there are so many other changes. Maybe we'll talk about it in this show later on.
All right. Sure. Arvind, let's also talk about rural growth versus urban and whether you expect to continue to see more of a focus on rural outpacing in terms of demand and growth going forward.
So again, I think a lot depends upon the kind of public spending which the government of India and the various state governments take up in the next 12 months. Because rural, when you look into the urban growth being compressed significantly more than rural because of the impact of COVID was apparently less in place in terms of lockdowns and economic disruption in the rural India. So the first 9 months of the current financial year on a relative basis showed rural economy doing better than urban. That did not mean that both rural and urban were growing. It was the urban economy which was under bigger stress. Going forward, unless the money in the hands of the farmers and money in the hands of people who are living in rural India increases significantly, I do not think that rural economy can be the growth driver for the overall economy in the coming year. Government spending is probably the key to see that how the rural economy's growth or consumption growth is sustained. This budget will be therefore a very important budget to see that it is an aggressive budget or is it a defensive budget.
Okay. All right. Do you also feel perhaps, Milind, talking about sort of the rural segment, FMCG, we saw a lot of down trading this time around as well during the lockdown period. Do you see that as a trend that will continue, or any other key trends that you feel? I know you talked about the advent of e-commerce, but what you feel we're heading in for now with the start of the new year and post-lockdown?
Firstly, I feel that the rural economy will keep doing better than urban economy for India. Several reasons. Agriculture has been good. The past 2 years have been good. This year particularly so. COVID hasn't affected as much. There has been a lot of focus by the government for political populist reasons on the rural economy. And if you look at the NREGA allocations, that 40,000 crore extra allocation also helped a lot. So I feel that the rural economy growth, as far as FMCG is concerned, will keep being twice or at least 1.5 times that of the urban economy. That will continue. I also feel that the divide between urban and rural is made for analytical purposes, and in reality, the gap has narrowed down considerably in terms of logistical reach or in terms of digital media reach. I feel rural is catching up with urban very fast. And once you are looking at India as an integrated economy, there are only specific physical limitations of reaching out smaller villages, etc. So I feel that there may be about 95,000 villages which are where income is growing significantly and which are really reachable by consumer companies. So I feel that the entire focus on infrastructure in terms of logistics, roads, connectivity, digital reach, coupled with the fragmentation of the TV media. 20 years ago, TV was the only source of reaching rural. It may not be so now anymore. So I think rural is something which will, I somewhat disagree with Arvind that the rural economy by itself could sustain a lot of FMCG growth in the coming years. After all, it's 80 crore of population. 40% of the FMCG market is in the rural space. And that's a significant part.
Right. Mr. Singhal, I want to talk about the raw material inflation as well for FMCG companies. Is that prompting you to expect more price hikes? Can that lead to as well a shift in consumers focusing on large packs? Can you just give us a sense as to how the situation is panning out, how it's affecting companies' margins as well?
See, the companies don't, in my opinion, have much of a choice because in the situation I just mentioned a short while ago, consumers' incomes are under stress. While raw material price increases are there, but if any company were to make an attempt to pass on the prices to the consumers, it is very likely that they might see further pressures on demand. So I suspect that the larger companies will probably want to take a hit on the margin and to the extent possible, refrain from passing on any of the input cost increases to their consumers. So by and large, while it is a cause of worry from the point of view of those companies themselves on their balance sheets, but I think they have a Hobson's choice. Any attempt to pass on the price increase to the consumers could make further negative dent on their balance sheets by demand compression.
Okay, so as of now, that's not being looked at. And Milind, given the fragmented nature of the industry, do you think that now there's going to be a case of consolidation taking place, increasing formalization as now unorganized players are losing market share?
Yes, they are, because as I mentioned earlier, when safety became a primary attribute in the consumer's mind, safety which evoked trust, I think people innately move towards known brands, known commodities, and even packaging versus unpackaging. See, the FMCG journey goes from loose to packed to named to branded. I think that journey was facilitated by COVID simply because of the safety factor importance in the consumer's mind. I feel that journey will continue. I also feel that when you spoke of consolidation, there may not necessarily be consolidation. One is that the sheer inavailability of brands of a large size. The second point is that there is a new breed of only digital brands coming up, which are small and which grow up to a certain size, and then their whole objective is to get acquired by a larger brand. That trend will continue. So only digital as a new segment is certainly coming up. I also feel that the companies which have a strong supply chain network, logistical network, and a good trade equity will also continue to do well, because India's FMCG trade is also reorganizing. One of the impact of COVID on the industry, we are looking only at the manufacturers and the marketers, but the FMCG trade, which is a very significant part of the industry, has also galvanized itself into getting more digital, more organized. The next generation of the distributors is definitely a different generation. So I feel that there are long-term changes happening in the sector, arising out of digitization and also arising out of the whole modernization of larger corporates, which is also percolating down to the smaller entities. So I feel consolidation of a different kind will ensue. And just another point, to go back to the price hikes part, I feel that companies have spent a lot of time and energy in reorganizing their cost base. They have saved a lot of money sheerly because of the pressure that COVID brought in. Secondly, in terms of media spends, I think companies have been far more judicious, and I'm sure there is at least a 200 to 300 basis point correction which has happened across the board. Now, this correction amount is available to the companies to withstand raw material price hikes up to a point. But typically, as they say, during pandemics, the rich get richer and the poor get poorer. So stronger brands will get stronger and they will be able to command a price hike, and weaker brands will not be able to command a price hike and therefore will wither away. So consolidation of that kind is also likely to happen.
All right, so understood. Thanks very much, gentlemen, for giving us a clearer picture as to what things look like. Digital e-commerce penetration will be the focus. Rural will continue to play catch up. And of course, all eyes on the budget and what that could potentially dole out for the sector. Time for a short break with news that we're at 14,518. Pharma, banks, FMCG, media in the red.